Welcome to the Never Die Podcast, your weekly crypto alpha for those who never quit. Remember, the number one rule in crypto investing is to never die. You need to stay in the game, stay alive, and have a strategy so you can live long enough to take home the prize. Today, we're going to be talking about, are we getting ready to enter the parabolic phase of the crypto cycle, often known as the banana zone of the crypto cycle. And this is the phase of the cycle where prices just go parabolic. They go skyrocketing through the roof. So we're going to get into what exactly is the parabolic phase of the market. We're going to look at previous parabolic phases and what they look like. Are there any patterns that maybe match up to where we are currently in the outlook and the setup we're looking at currently? We're going to look at what causes parabolic run-ups. So what are the underlying fundamentals that push price up these parabolic levels where we see, all these altcoins, Bitcoin, everything skyrocketing. You have this mass mania where all these people are flooding into the crypto markets. What sparks these things to happen? We're going to look at our own current state of fundamentals right now. Like, what are the fundamentals right now that maybe could match up or line up with those things? And lastly, we're going to look at the wealth effect and examine how these parabolic run-ups with things like Bitcoin and ETH eventually bleed down into alts, and what we typically see during that phase of the cycle. So this is going to be a really in-depth episode, really all just focusing on the parabolic phase, the banana zone of the crypto cycle. Let's dive in. We're going to start out with, what is the parabolic phase of the crypto cycle? Again, I keep calling it the banana zone. That's not my term. That's from Paul. I don't even know if I'm pronouncing his name right. But he kind of coined that term, the banana zone. And basically, it's just a way of saying that it's when prices go absolutely banana. Like, it's really hard for you to understand this if you've never experienced it, because you probably think like, oh, I've seen prices go bananas. And no, if you've never lived through one of these parabolic phases, you have not really genuinely tasted the banana zone until you've experienced it. It's hard to fathom. Just like I had a hard time expressing last cycle what it felt like when we entered a crypto bear market. So every time we'd have like a dip during the bull run last cycle, people would ask me, is this a bear market? Is this what it feels like? And I was always like, no, you will know when it's a bear market. It's hard to fathom how the bear market feels until you've experienced it. And when you experience it, you understand it's much more painful than these little dips we're experiencing. And in the same way, the banana zone is much more insane than the pumps that we've experienced so far this cycle. It's out of control. Like it causes like mass greed across the board. This is what flips everyone like mega bullish. Okay, so if you're wondering like, how are we going to get to a point where like retail floods back into the market? People on Twitter are mega bullish and they're just like, it's up only, nothing can stop crypto, which we haven't seen any of this so far. What causes that flip? It is this parabolic phase of the cycle where things just go crazy. So to summarize, the parabolic phase of the cycle is when crypto prices go up really, really fast and really, really sharply. On a chart, it looks like it's like a J, right? So it starts out as a nice little smooth curve, and then it almost goes perfectly like just straight up. And on a chart, if you go back to 2021, you go back to 2017, you go back to 2013, you can really clearly identify the banana zone, the parabolic phase of the crypto market by looking at those charts, because it just dwarfs. You see the price of Bitcoin go up so fast and so steeply, it just dwarfs anything that any of its previous price action, okay? And this parabolic phase happens every 4 years. So every 4 years, we see this happen, like clockwork. So since the launch of Bitcoin, we have had a parabolic phase every 4 years. We have a 100% historical track record of this parabolic phase happening. And so the question really is, are we going to see it again this time? Because if we are, that's got some obviously pretty big implications for the crypto market. And if we aren't, it's going to be the first time ever we don't really see a parabolic phase. Now, some people argue that last cycle wasn't a true parabolic phase. We did see prices sharply climb, and it was pretty crazy, but we never had that blow off top that we typically get. So, and I agree with that. Yeah, it was different. Like previous cycles, we had this crazy blow off top where prices really did just go into the stratosphere. And last cycle, it was a little bit more tamed. So maybe that's a sign that things are changing, and maybe this cycle will be kind of similar, where it's like a little less than we expect. But maybe we still get a parabolic cycle of some kind. I don't know. It's kind of hard to tell, and it's definitely possible we don't get the same parabolic cycle or the same parabolic run up that we have gotten in the past. Things change. I don't know if you guys know this, but the markets aren't going to just repeat this pattern forever into the future, right? But at the same, so we know that for a fact. Like eventually this will break. But at the same time, there seems to be a reason for this parabolic cycle pattern happening on this 4-year time frame. There are fundamentals that tend to push it up, that tend to spark this thing. So it's not like just out of the blue every 4 years. There's too much of a pattern there for just to be out of the blue every 4 years. It just happens to be, line up. There are some patterns that spark it, and I'm going to get into a little bit of those patterns that tend to spark it. First off, you have a lot of people would point to the Bitcoin halving. Bitcoin halving happens every 4 years. It's mathematically programmed into Bitcoin. A lot of people would say it's supply and demand. When you reduce the amount of new supply of Bitcoin coming into the market and you have the same amount of sustained demand, it's going to push up prices. This is what kicks off the 4-year cycle parabolic run-up. I think maybe there's a hint of truth here, and that it does cause maybe some more media attention. It does tend to push up prices to a degree. So maybe there's a hint of some truth here, but I don't think it's the full story. I've heard that it has to do with liquidity cycles and the way that our liquidity cycles fluctuate every 4 years. I've heard that it has to do with the elections and the fact that we have elections in the U.S. every 4 years. I've heard it has to do with, the Fed, and there's all sorts of theories around this. And I think there's a little bit of truth to all of them. And it's actually not just one thing, but it's maybe a little bit more complicated than that. So I in my opinion, having looked at this a lot and trying to figure out what causes these 4-year cycles, why are they so consistent? It has to do with credit, liquidity, psychology, the halving, and it's all kind of like a mix of these. And maybe we'll start with psychology. So psychologically, people that were invested in the crypto markets last cycle, they need a certain amount of healing time before they're willing to jump back into the markets. Like, they lost a lot of money. It was really painful, really scarring. They don't want anything to do with crypto. And it tends to take, it seems like, 4 years for people to be willing to take another look at crypto. Same thing with the news media outlet kind of coverage cycle. It's very bullish during the bull run, very bearish during crypto winter. And then it tends to kind of just move on at some point and just stop covering crypto. And then when prices start creeping back up, it tends to be not necessarily bullish, but because of what's happening, it's kind of secondhand bullish, right? They're not, the news media isn't specifically bullish, but they're covering the price appreciation of Bitcoin, which tends to be a bullish signal to people watching, right? So I think on one hand, you have that. On the second hand, you do have the presidential 4-year cycle. I don't really know. I can't pinpoint exactly how this impacts the parabolic phase. Personally, I've tried to dissect it many times. Maybe somebody out here watching has a really good theory as to why this impacts it. I can never figure it out. One of my theories was, you have change every 4 years, but you don't always have change. Sometimes it's the same candidate and they're just going on another 4 years. So I don't really know exactly, but it feels like it's because it's so aligned with the presidential election cycle. It feels like that must play some sort of role, but again, I don't really know. The third thing I think it does have to do with the liquidity cycle. So if you look at the liquidity cycles, they do match up pretty well with the 4-year cycle. And so it tends to be that as liquidity is climbing, the global liquidity is going up in the world, you see the price of crypto climb, which makes sense. As there's more liquidity, there's more money available. Some of that finds its way into crypto, which makes a lot of sense. And along with liquidity, you typically have some sort of innovation catalyst within the crypto market. Okay, so 2013, you had Coinbase launching. It made it a lot easier to buy Bitcoin before it was extremely difficult. 2017, you had Ethereum launching back in 2015. They brought smart contracts to crypto. You had a bunch of ICOs, ERC20 token launches. This was kind of a new thing that brought back speculators to really check out the space and take another look. 2021, you had DeFi taking off, NFTs, a whole bunch of new things within the crypto that was really, really interesting that people wanted to take a look at. And then now we have the 2025 cycle that I expect to happen. And we do have some catalysts to look at. We have the ETFs, for one, which are a brand new thing within crypto, allowing institutional capital to flow into crypto, as well as just kind of like the stamp of approval from TradFi. So TradFi is looking a lot more at crypto. We recently had Tether, which is a small company. They have less than 50 employees, and they're actually beating BlackRock in total profit. So like total profit for Tether was something like 6 point something billion. Total profit for BlackRock was like 5 point something billion. So, and all Tether does is their stablecoin, where BlackRock has a ton of assets under management. They can do all these things. So you have like maybe some more legitimacy coming to crypto via these ETFs, via TradFi getting involved, via some of these companies maturing and showing some real profit potential and actually outpacing some of these TradFi companies. We also have things like crypto gaming, which I believe is going to be a standout use case of crypto, where people are going to really kind of get it. Like, oh, okay, this is digital ownership of assets. I think that's going to bring a lot of users and adoption. We have L2s and things like Solana bringing a lot cheaper fees and a lot faster transactions to the crypto space. We have perps on chain making leverage really easy. We have a ton of real world assets coming on chain and that really starting to take off. And a lot of protocols that are finding product market fit and generating real revenue and real adoption in their categories. So again, there's typically some sort of innovation that maybe kicks off the parabolic run up. There's psychology, there's liquidity, which back to the liquidity point, I mentioned global liquidity going up, but you could also make a strong argument with the new on-ramps into crypto via Bitcoin and via Ethereum ETFs. That's a new source of liquidity as well, from previous institutional capital that couldn't penetrate into the crypto space that now can through these institutional vehicles. So we have a new liquidity source on that front as well. And personally, I would lean towards saying that it's macro forces that are really driving up the crypto market that caused the parabolic run up. And specifically, I would really point towards liquidity and psychology, like mass psychology and liquidity. Maybe the presidential election cycle has something to do with the psychology of why people are more risk adverse during this phase of the cycle. I don't know, but I would point to those two things as maybe what causes parabolic run-ups, but with a heavy emphasis on liquidity being a really big main driving factor of what pushes up crypto prices. The more liquidity you have flood into the market, the more Bitcoin and crypto are really reflexive towards liquidity. And if you get a flood of liquidity, you can almost guarantee crypto prices are going to skyrocket, which, by the way, is a really great setup for what we're going through right now with this rate cutting cycle with the Fed. They cut 50 basis points. That's a huge liquidity unlock. It unlocks liquidity in a lot of different ways. One of the ways it does it is directly, right? Like lowering interest rates allows banks to make loans. When a bank makes loans, that's a form of money creation. They're actually printing money out of thin air because we have a fractionalized banking system, right? So the banking system isn't based off of like $1-for-$1 to loan ratio. They're actually creating a loan based off assets they don't even have. And so that's a form of money creation. But on top of that, it unlocks liquidity in a variety of different ways. For example, you have treasuries where a lot of people hold their wealth in treasuries. They've been getting great rates on those. But as the rates on those depreciate and go down, that capital has to seek out riskier avenues to generate some sort of yield, because it can't just stay stagnant because we have inflation in the U.S. and that depreciates the value in money. And so that capital is likely to flee to a lot of other places, including stocks, crypto, etc. So currently we're in a really good setup. So, and I'm kind of getting ahead of myself because we're going to talk about the current state of fundamentals in a second. But currently we're in a really good setup fundamental wise for more and more liquidity to pour into the market, because of course the Fed isn't just cutting 50 basis points, which is 0.5%, for people that don't speak TradFi, this weird way they speak. It's just 0.5% cut. That's not the end of the cutting, right? They're going to do a lot more cuts besides that, and that's going to allow more and more liquidity to flow into the market. That takes time. It doesn't happen overnight. It can take months to even longer for that liquidity to actually hit the market. Oftentimes, the market will price those things in, though, before the liquidity actually flows in. The market is anticipating that liquidity to flow in, so it'll price things up before then. On top of the liquidity, I mentioned psychology, and I want to hit that up again just really quick. Psychology-wise, I do think a huge driver is you do see this big depreciation in price of, and I should have mentioned this earlier, but I was just thinking of this. you see this huge depreciation in price of crypto assets, right? They all go down in price a lot, sometimes 90% or more. And that's an opportunity people could have bought in, but they weren't paying attention. They didn't buy. And then you kind of see this slow appreciation of those assets over the coming years, over the coming 3 years, whatever. And it does reach a kind of a crescendo for whatever reason. For the average person, the more prices go up, it's like the more they want to buy that asset. It should be the opposite, but for whatever reason, it isn't. So as prices keep climbing, they get FOMO on the sidelines. And so the parabolic run up really, as prices go up faster and faster, you have more and more people that pile into that trade because they see it going up and they don't want to miss out. And they've seen that they've already missed out a ton. And so that really plays a huge role in it as well. And I forgot to mention also credit plays a huge role, or the ability to leverage up a position takes up a huge role. So as interest rates go down and capital is cheaper to access, that allows more and more leverage to enter the system, which pushes up prices higher. And as people believe that prices are going to go up only, as they look at crypto and they've watched it over a long period of time, over a 3-year period, continuously go up, even when people are saying it was going to zero, even when people are saying it was going to crash, and it doesn't, and they start to gain confidence in it. Well, as people gain more and more confidence, they put more capital in, but they also gain more confidence to do things like take out leverage. And so they'll take out leverage thinking, if you think an asset's going to go up only for a long period of time, it makes sense in your head, even though it's a stupid thing to do. It makes sense in your head to say, oh, I'm going to take out leverage on this thing. Because like if you knew for sure an asset was going to go up only for a long time, like for sure, you like had a crystal ball, you could see the future and you're like, okay, this asset's going to go up for the next 10 years. Well, why wouldn't you take out leverage? If you knew, that would maybe be a smart decision, because then you could make a lot more upside because you're taking out leverage. And so people start to believe that things are going to go up only for an extended period of time. And so they throw in a ton of money and then they mortgage their house, or they take out credit card debt or whatever. And that leverage pushes prices up really fast, really rapidly. And that's a huge part of what drives up a parabolic run up. So access to credit is important, liquidity is important, psychology is important, and all these other factors that we said. The current state of those fundamentals is that I kind of went through some of them. Global liquidity right now is trending up. It is starting to climb. And that has to do with things like the Fed cutting interest rates. And when they cut interest rates again, you get money creation. Even though the Fed's not printing money, loans are a form of money creation. And as I mentioned as well, with liquidity, we also, specific to crypto, have tapped into the TradFi system and now have this pathway between TradFi and crypto for more liquidity to flow in that way. And that takes time. I've talked about this before. That takes time. A lot of people don't even understand how much time this takes. I listen to a ridiculous amount of podcasts. I do a lot of walking and I listen to a lot of podcasts. And I've listened to quite a few podcasts where they've had on people from BlackRock, or they've had people, ETF managers from these companies that are launching ETFs. And across the board, unanimously, they say the majority of TradFi wealth still can't access these ETFs, because they have to go through specific due diligence processes before they can turn that on. And they're really slow. They're really just, it's a traditional finance firm. They're not going to act quick. They're going to act very slow, and they're going to take their time. And those are going to continually just kind of turn on those pathways between these institutions with trillions of capital are going to turn on over the coming years. And that's going to allow so much more liquidity, and the marketing from those institutions is going to turn on over the coming years. And that's going to allow so much more capital to flow into the crypto space. So you have liquidity on that front as well, which I think is actually a huge, huge thing that we've never had before in crypto. And you got to consider that with every asset on the planet, TradFi owns the majority of those assets, with the exception of crypto. They still own by far the minority. So you can expect a lot more wealth from TradFi to transfer in here as they buy up more and more of these assets, because it's very clear at this point that crypto is here to stay, and it's here for the long haul. And there is a use case to tokenization. There is use case to DeFi. There's use case for stable coins. There's use case for things like Bitcoin, Ethereum, etc. So you're going to see more and more ownership as TradFi starts to get more and more involved in the space. As I mentioned, again, Tether, a 50-person company, is making more money than BlackRock is. They are producing more profit than BlackRock, and all they have is a stable coin. That is like the biggest bat signal in the world. Like, all these companies are looking around like, what? this crypto company that, it just has a stable coin is making more money than BlackRock. That's crazy. And so you're going to see more and more TradFi involvement in the crypto space. It's just only based off their own greed and the fact that they have all these traditional products they've been selling for decades. Now they have a new product called crypto that they can sell to all their clients. And the more products they can wrap up and sell to their clients, the more fees they generate and the more money they make. So they're going to wrap up, market, and sell these things in mass. So that is a huge, huge driver of what will push up crypto prices, and I think is a strong fundamental for this parabolic run-up. On a psychology front, we're going into October, and October is typically the strongest month for crypto price appreciation. So October through kind of March, sometimes April, are the strongest months for crypto. And I've heard this outlined for a lot of reasons. It's because people are home, they're not on vacation, they're kind of bored, they get more involved in crypto, they're more willing to take risk. I don't really know what it is, but historically, that's a really strong pattern that October is when crypto enters kind of its strength period. And so on that fundamental setup, we are really primed for, if we were going to see a parabolic run up, this is the perfect time for that to start happening. And on another note, going back to liquidity, sorry, these thoughts are just kind of all over the place and it's kind of scattered about. But on another note, going back to liquidity, I've talked about a lot before what's called the great wealth transfer, or the idea that there's going to be tens of trillions, it's something like $70 trillion in wealth transferred from the older generation to the younger generation over the next 2 decades. That also is a big spigot of liquidity that is going to constantly flow into crypto. The younger generation, by and far, are the biggest buyers of crypto, and it is a huge portion of their overall investment portfolio, way outsized proportion of their portfolio. And so you can imagine as they inherit more and more wealth, they're going to be rotating that wealth into crypto. Not all of it, obviously, is going to be rotated into crypto, but at least a portion of that is going to be rotated into crypto. And that's more liquidity rolling into the crypto markets. And I think this is kind of like a flywheel effect of all these things are going to continually push up crypto prices over the coming decades. It doesn't really help for a short-term parabolic run-up as far as liquidity goes, but that is just maybe a longer-term note to add. So looking at the current state of fundamentals, it does look like, on one last note, is that according to the 4-year cycle, so if you look at the historical 4-year cycle, when should we see that parabolic run up? It should start in October. So according to the 4-year cycle, the pattern that's been a really consistent 100% historical pattern in the past, that would point to October. And I would take that one with a grain of salt. Like I said, patterns can be broken, but that points towards October being the kickoff of the parabolic phase of the cycle. So it seems like there actually are some pretty decent fundamentals that could lead to a parabolic run-up. Now, that it doesn't mean for sure. And I would say the bear case of this would be if we see some sort of major recession. One thing that does worry many people right now is that the Fed cut by 50 basis points. That is pretty insane if you're not aware. The last time they cut by 50 basis points was in 2007, right before the great 2008 financial crisis. And so they cut 50 basis points because they saw a rot within the system and they were scared back in 2007. So the question is, do they see something that we don't right now that we should be scared of that is going to cause some sort of major collapse or recession? If that's the case, then that's a pretty bearish case against us going into a parabolic run-up. It's possible that they don't. It's possible that they actually just feel like they should have cut earlier and they're worried because they were so late to raise rates and they underestimated how late that was and how bad of inflation would be, that maybe now they're afraid they're too late in cutting rates and they are trying to be a little bit more aggressive. It's not that they see a rot, but they're afraid of what they don't see, and they're afraid that maybe something could break, and they want to make sure that doesn't happen. So that's hard to say. It's hard to say if that would be the bear case against maybe a parabolic run-up. If we do see a parabolic run-up, let me kind of walk you through exactly how this would look and how this could play out. So typically with a parabolic run-up, you'll see things like Bitcoin and ETH run up first. These things skyrocket first. And this creates what's called a wealth effect. Basically meaning that as the price of Bitcoin and ETH go up, right? Remember, they're the ones plugged into the TradFi rails. It bleeds down into all the other assets. And this, again, kind of has to do with liquidity. If people have a lot of money And like Ethereum, I think has a little bit of a deeper effect because Ethereum is so plugged into all these other ecosystems. And a lot of people hold Ethereum, a lot of projects hold it in their treasuries. Most assets are paired with either USDC or USDT or Ethereum. So Ethereum really causes a really strong wealth effect. So as Ethereum goes up in price, people have more money to invest. And as people have more money to invest, and as projects have bigger treasuries and all this kind of stuff, they're more likely and more enticed to bleed off some of that money into some of these smaller altcoins, which causes them to go up in value. If you don't know, it's like something like 70-something% of the crypto market cap is just Bitcoin and ETH. It's only like a small 30% that represents all the other altcoins. Okay, so when Bitcoin and ETH go up in value, you have a bleeding down effect of where people feel wealthy. They start to buy a lot of these other assets, and because they feel wealthy. And you also have a psychological aspect where as Bitcoin and ETH go up, a lot of people on the sidelines say, wow, I missed that. But the way I'm going to like feel good about myself and not feel like I missed out is I'm actually going to go buy this other crypto that hasn't gone up. That's an alt. So maybe it usually starts with the greater, I call them the greater alts, but that'd be things like Uniswap, Aave, maybe Maker, Polygon, things like that. They'll throw money into. And then as those things go up, the people that missed out on that and Bitcoin and ETH will say, I missed out on that. But what about these lesser alts? So then they'll throw money into like projects that are maybe not quite as sure footing. Maybe they don't have revenue. They're kind of newer projects, but they could end up being something cool. And then as those go up, then people look at like the really speculative, like kind of bottom of the barrel stuff. So look at like Ponzi's, like garbage, vaporware projects, meme coins. Oftentimes, this is when people have so much money, they start flexing with NFTs. They buy a lot of NFTs to kind of show off. That's generally the last phase of the cycle. Then everything collapses and we have another bear market. So that's typically how it works. That's how the wealth effect works. And if we did see a parabolic run up, we saw a parabolic season, that is the most likely outcome. Like people are always the same. People's psychology has not changed for thousands and thousands of years. And so you can count on people kind of acting or behaving in the same fashion, given the same circumstances. And I believe very strongly if Bitcoin and ETH go up rapidly and we see them appreciate in price rapidly, it's going to attract a whole new gaggle of retail into the crypto space. They're going to start investing into the greater alts, then the lesser alts, then the meme coins, the Ponzi's, etc. And we're going to see a whole bull cycle, parabolic bull face like we have seen in the past. All it requires is that first kind of parabolic jump. And I think we do at least have the kindling and the spark available that we could see that. As always, none of this is investment advice. Crypto is risky. You should always do your own research. Remember, the number one rule in crypto is to never die. You've got to keep yourself in the game, have a strategy, be patient, and let the market come to you.